Do you want to find out more about how a business handles its money? Do you want to learn about the basics of corporate finance and how they can help a business? Look nowhere else. In this video essay, we will look into the world of corporate finance and see how important it is to maximizing shareholder value and meeting a company's financial goals. We'll talk about everything, like how to get money, make smart investments, share profits, and make smart financial choices. Corporate finance is an important part of business management that looks at how companies make decisions about their money. In order to maximize shareholder value and meet the company's financial goals, this process includes getting money from investors, making investments, and giving out profits. Raising money is an important part of corporate finance because it lets businesses pay for their operations and growth. A business can get money in many ways, such as by selling stock, getting a loan, issuing bonds, or looking for funding from venture capitalists. When a business sells stocks, it is basically giving investors a piece of the business in exchange for money. The investors become shareholders and are entitled to a share of the company's assets and profits, as well as the right to vote on some business decisions. Loans are another way for businesses to get money. For example, Central Perk could ask a bank for a loan to pay for updating and expanding one of its coffee shops. But the business needs to carefully look over the loan's terms and make sure they will be able to pay it back with interest. Bonds are a type of debt instrument that allows businesses to borrow money from investors. Investors, who are also called bondholders, give money to a company in exchange for interest payments. Venture capital funding is another way for businesses to get money. This is especially true for new businesses that might not have enough assets or a good enough track record to qualify for traditional forms of funding. Venture capital firms will give money to a business in exchange for a share of the business. When a business raises money, it's important to put that money to the best use possible. This means looking at different investment opportunities and choosing the ones that are most likely to make money. Central Perk might decide to open a new store in a more profitable area or buy new coffee machines that will save them money in the long run. Corporate finance is also in charge of figuring out how to spend the company's profits. Dividends, which are payments made to shareholders, and share buybacks, in which the business buys back its own stock, are two ways to do this. Dividends are a way for companies to give some of their profits back to their shareholders, and share buybacks are a way for them to raise the value of the stock they still own. Friends, which is a popular TV show, shows how corporate finance works in real life. When Joey's entertainment business buys a new office, this is an example of putting money to work. Also, Chandler's advertising firm pays dividends, which is another way that profits are shared. In general, corporate finance is an important part of how a company manages its money. A company can meet its financial goals and maximize shareholder value by effectively raising capital, investing capital, and giving out profits. Now that you know the basics of corporate finance, you have a good place to start thinking about how these ideas might apply to your own business or career. Whether you're a business owner looking for funding or a finance worker, knowing these principles can help you make decisions that are good for your business and its shareholders. Don't be afraid to be creative and think outside the box when it comes to getting money and making smart investments. If you want to do well in corporate finance, your main goal should always be to maximize shareholder value. We hope you enjoyed this video essay on corporate finance and that it helped you learn more about how to handle the money side of business. We appreciate your interest and hope to see you at the next one.